Sasol was founded in 1950 to make oil from coal for the South African market. Today, Sasol uses coal, oil and gas reserves to manufacture and sell liquid fuels, fuel components and chemicals throughout the world. It has a market cap of 271 billion rand, a PE of 9.7 and a dividend yield of 3.6. And Sasol's share price looks very different to both that of BAT and SAB Miller. At the moment, we're waiting for some huge kicker to come through and give back that value to all the fund managers who hold Sasol.
Definitely. I think the kicker is probably going to come in the form of Sasol's technology advancements. These days they're more than just a simple oil company. They're gas to liquids technology. That's really the key that Sasol's trying to play out.
But they've been singing that tune for some time now, haven't they?
They have been singing that tune, but they've also been investing heavily in getting assets that they can develop. And those assets chew up the cash that Sasol has. At the moment, they've pretty well invested now, even in the US. And going forward, as these projects come online, you're going to see that cash coming out to investors. And obviously, investors love getting cash. That's when you're going to see the share price move. Well,
picking up on that, in terms of the US, Louisiana, I believe they are the biggest foreign direct investor in that space.
Yes, so they've got some incentives from the Louisiana regional government, and they're going to build a massive gas to liquids plant there because, as you know, they found a lot of gas also from fracking, but offshore in the US. That's very cheap. So the gap between refined, finished petroleum products that you put into your car or truck and gas has come, to be as wide as one can imagine. So that's good news. The only problem is that plant is going to cost like the equivalent of the market cap of the company. So it's an enormous and very bold bet.
And there's been much debate around the merits of it. It looks as though we've got a number of shareholders backing the story firmly.
I think so, but I think people do anticipate that there are going to be risks. And as you know, with big capital projects, there's potential for overrun and all that sort of thing. But I think it's just too juicy. Some have said, oh, well, but Americans are starting to drive less, which they are. But remember, this thing is going to be a relatively small contributor to the total, kind of US fuel consumption, which is gargantuan. Yeah. So all things being equal, I think it is a good one, but I think it's going to be quite interesting to see how it trades in the forthcoming years. But this would be more, for me, the logical sort of defensive position, because it's got real appeal, and it hasn't yet reflected in the share price.
I worry that you're starting to sound like a value manager. Are you being influenced by those boys out there?
Well, that's what we've got to talk about today is defensive shares. So here I am trying to do it.
Okay. You're going to change your philosophy as we go, I can see. Right, so Sasol right now, can we go back to those levels which are post the 480 level? Do you believe so, Warren?
I definitely believe we can go past those levels. I think currently the share is trading on a P of around 9, and like you mentioned, there is a bit more risk compared to a BAT or SAB, but it's already priced into the share. That's why you get it at a PE of 9.
How high is your level of conviction? Because I'm going to go back to that statement that there are many fund managers who own Sasol and have been holding Sasol for a very long time. Would you accumulate more? No.
Look, it's because it was a South African company. It was listed back in the 80s at 2 Rand a share, and it now trades at these elevated levels above 400. So it's a great big success story for South Africa, and it's gone along with a combination of the weakening rand and the rising oil prices. When they started this business, oil was $9 a barrel. Now it's well up over 100 and looks like it's going to stay there forever.
But those are still the two biggest external impacts on their earnings.
Yes, and what's been driving it higher lately has been the weakening rand. So we're in this position on the hot stocks portfolio, and we're benefiting from being long and it's going up.
Did you answer my question? Are you going to buy more?
I think so. I mean, I don't know in a hot stocks portfolio where your time frames are like 3 months, whether it makes sense to be waiting for the Louisiana plant, which is going to take 20 years. So that's my only concern. But I do like the story very much.
So you're not buying anymore?
Yeah, of course we're buying more. Always.
Hot or not on Sasol?
I'm going to go hot.
You're going hot. Paul, what are you doing?
What a blazing hot story.